Good afternoon. I think it's time that we had a discussion about a stock a lot of people were talking about over the past, well, I guess year and a half, and it's the issue of Cosmos Energy. Cosmos Energy is becoming one of the most fascinating recovery stories in the energy sector in 2026. Not because it is safe and not because the risks have disappeared, but because the market is beginning to recognize that this company may have crossed the line between survival and recovery. For much of 2025, Cosmos traded like a company under siege. Investors were deeply concerned about leverage, refinancing risk, offshore execution, and whether the company's long promised LNG exposure would ever fully translate into sustainable cash flow. The stock collapsed from above $4 to below $1 as energy sentiment weakened and fears surrounding debt intensified. But the first half of 2026 has introduced a dramatically different narrative. Operationally, Cosmos has delivered what may be the strongest production profile in its recent history. Quarterly production climbed to record levels, roughly 75,000 barrels of oil equivalent per day, while production expenses declined materially year over year. In other words, the company is now producing more hydrocarbons at lower operating cost. For any leveraged company, that combination matters enormously. And then there is the Greater Tortue Ahmeyim LNG project, the centerpiece of the modern Cosmos thesis. For years, the LNG story surrounding Cosmos was viewed by portions of the market as aspirational, even speculative. But now the project is operating above nameplate expectation. Cargo volumes are increasing, and Cosmos has positioned itself within one of the most strategically important energy themes in the world: global liquefied natural gas demand. That changes the institutional perception of the company. Cosmos is no longer viewed simply as a small offshore driller exposed to volatile crude pricing. Increasingly, it is being discussed as a leveraged LNG and energy transition play with improving operational execution. Now the balance sheet remains a major issue. Net debt still sits near $3 billion, and no serious analyst should minimize that risk. This remains a highly leveraged company in a cyclical industry. Oil prices matter. LNG pricing matters. Global growth matters. A major downturn in energy markets would still pressure the company significantly. But what markets care about most is trajectory. And the trajectory has improved. Management has now increased debt reduction targets for 2026, and investors are beginning to see a path, not necessarily to perfection, but to stabilization. In the energy sector, once markets begin believing that refinancing risk is declining and deleveraging is credible, valuation multiples can change quickly. Now let's discuss the technical picture, because the chart itself tells an equally important story. The long-term chart of Cosmos Energy shows a textbook transition from despair to accumulation. Throughout most of 2025, the stock exhibited classic distribution behavior: lower highs, lower lows, weak rallies, and persistent institutional selling pressure. But beginning late last year, volume characteristics changed dramatically. The stock began building a base. By early 2026, accumulation evolved into breakout behavior. Momentum accelerated sharply as the stock climbed from under $1 to above $3 in only a few months. More importantly, volume expanded during the advance, a critical signal suggesting institutional participation rather than purely retail speculation. Now, in recent weeks, momentum has cooled. The chart's repeated rejection by controlled pullbacks toward the high $2.80s. But what is notable is the absence of panic selling. So far, this appears more consistent with consolidation after a major advance than with structural breakdown. Technically, the $2.80 to $2.85 region is now becoming a critical battlefield between short-term sellers and long-term accumulation buyers. If the stock can stabilize and reclaim momentum above the low $3 area, the market may begin testing materially higher levels later this year. And this is ultimately why Kosmos Energy has become such an intriguing market story. This is not a blue chip energy major. This is not a low-risk dividend stock. This is a leverage recovery narrative tied to LNG expansion, operational execution, debt reduction, and shifting investor psychology. In many ways, Kosmos now represents the broader energy market of 2026 itself. Volatile, uncertain, geopolitically sensitive, but increasingly driven by the realization that global energy demand, particularly LNG demand, remains far more resilient than many expected. And if Kosmos continues executing operationally while gradually reducing leverage, Wall Street may eventually stop treating this company as a distressed survivor and start treating it as a legitimate turnaround. Thank you very much. I wish you a pleasant afternoon.